Let's start with the resilience that we've seen so far in the U.S. housing sector. Do you feel like it's a little overdone, that it's set to take a pause, or do you feel like there's something very real behind this momentum?
So first, thanks for having me. I think that housing has been strong for a while and it's going to continue to be strong. I think we're going to continue to have very low interest rates, which will fuel refinancing activity. And those refinancing rates are also increasing buying power among consumers. So I think we're going to see a lot of activity in housing markets, which will continue to drive prices up. Among the reasons for this is that first, you have a lot of people who are looking to leave areas that are affected by the pandemic and move to other parts of the country. Second, you have a lot of people who are living and working and educating their children all in the same house, and they feel like they need more space, so they're searching for new homes. And then I think that the people have realized that they don't need to live where their employer is. And so that's causing people to also think about where else they could move. So all these things are going to increase demand, which I think will continue to drive up prices. And the low interest rate environment is going to continue to support that. So it's really exciting for those of us who are in the mortgage industry to help support this, and for us at Blend to really help our lender customers really drive the technological change that will allow them to meet this consumer demand and allow lenders to get that all done.
All right, we're going to get to Blend and the financing round that you just went through. But if I were Tom Keene, I would say, let's rip up the script. I see that you're in San Francisco and you're talking about people moving away from where some of these big companies are. Do you expect the demand to continue in more of the suburban areas, but continue to hollow out in some of the big urban centers?
So I think there's clearly going to be demand for suburban homes, but I think it's way too early to declare the death of American cities. I was living in New York City on 9/11, and if you told me that 10 or 15 years later that New York would be even more vibrant than it was on September the 12th, 2001, I wouldn't have believed that. So I do think that there's going to be continued push for people to seek homes in suburban, even in some cases rural areas. But I think that will be a short-term issue for cities, but I don't necessarily think that's a long-term issue for cities.
All right, so let's talk about Blend. You just raised more money for this company. You rose to become the head of it, the president of it last year. Can you talk a little bit about what role it serves, since it seems to be a more business-to-business type of platform rather than a home buyer-facing outlet?
Sure. So, well, at Blend, what we're really focused on is serving the major lenders in the country. So our customers represent over 250 lenders around the country. Our customers represent over a quarter of the U.S. mortgage origination market, and we're processing over $3.5 billion of loans every day on the Blend platform. So I think the exciting thing for all of us working in technology and mortgage right now is that the change in consumer expectations around how quickly and easily they should be able to get access to credit, and the need to address that through technology is really quickly evolving. There's more change probably in the last few months in terms of driving technology change than we probably would have expected to see in the next 5 years.
Tim, I get that. Somebody is stuck in an apartment, in a studio apartment with 2 young kids. They want to get out of there as quickly as possible, and they want access to a mortgage so they can buy a suburban home somewhere with trees and a backyard. But how concerned are some of your clients about making sure that the standards remain stringent enough to avoid what we saw back in 2007, 2008?
So, look, having been at Fannie Mae, I understand as well as anybody, probably better than virtually anybody, the need to maintain credit standards. The great thing about technology and what we're doing now is that all people's income, assets, their employment status can all be verified digitally. We're not relying on people submitting pieces of paper and having a lag in that data, or even in some cases people having misrepresented their situation. All of that data can be verified digitally instantly. So it's really improving not only the speed and convenience for consumers, but it's actually also increasing the quality of the mortgages being originated.
Tim, when I start seeing things like home builder stocks rising to new record highs, the highs last seen in 2005, and I see this incredible strength amid a recession that's devastating the labor market, you do have to wonder at what point things are getting a little over their skis. I get the fact that rates are really low, but what signs are you looking for to indicate some froth in what we're seeing right now?
So Look, I do think that there's a segment of the country that has really suffered quite substantially economically as a result of the pandemic. And we're not through that yet. That pain is going to continue to be suffered. But we've had now for more than a decade just a dearth of new supply of housing in the United States. We are not creating enough housing to compensate for the increased demand. So what we're really seeing here is an imbalance in supply and demand that has driven prices up now for many years and will continue to do that because even if home builders build as many houses as they can build, they're still not going to be able to replace all the housing that's becoming obsolete as well as the increase in population. So I think the fundamentals are going to remain strong. It doesn't mean we're not going to have short-term issues or problems, but over the next few years, I think we're going to continue to see a very strong housing market.
Before I let you go, Tim, since you were the former head of Fannie Mae, I want to ask about privatizing the organization. People have been talking about this for a long time, some renewing that push this year, others saying it will lead to higher mortgage rates and some other headaches for borrowers. What do you think are the prospects of a near-term privatization of Fannie and Freddie?
I think reprivatizing the two companies is a very big and complicated thing to do. And I think it's good that people are focused on doing that. I think it would be good for the housing finance system if they were reprivatized. It would allow them to act more like private companies, become more innovative than they have been under government control. But raising the capital and going through the process of making that happen is a very substantial undertaking and will take a while. I don't think that's going to happen here in the next few months. I think it's probably going to be another, it's going to be at least into next year or maybe even the year beyond that before that finally gets accomplished.